So what your opinion now about this chart? With the help of wave theory, can we predict this breakdown? I want to say only one thing to my learners and listeners of Magic Fibs. Hello traders, welcome to the channel. Today 30th November, Nifty ends this week at 24,122 and Banknifty at 52,023. During our midweek market update, we discussed that if the price does not cross us above this previous high, there is a chance of price to make one more low and it can even reach 23,950, right? The price exactly moved as per expectation. Let me show the chart in 15 minutes so that you can understand it clearly. See, the midweek market update shared on 27th, okay, during this time, end of 27th here, okay. And the 28th, the next day, the price not crosses this previous high. You can see here. The price does not crosses the previous high and started to sell. And this is what we discussed exactly in our midweek market update, right? And I will share the 30-second clip where I said the same thing in our midweek market update. If the price does not crosses here, there is a possibility of one more low and the minimum support is 24,120. And if the price does not support here, there is a possibility of the price to reach 24,000 to 23,950. Okay. And the price may take support here and it may move higher to 24,530. See, it was very clearly explained what is the probability. Usually I will not respond to the negative comments. Yes, I can see some negative comments if the view went wrong. But even though the view worked 100% exact manner, but still receiving negative comments shows their intention. During this time, their common issue was, I'm always sharing the alternatives. I'm not going to explain to them because they don't have the capacity to hear, but to my genuine learners and listeners of Magic Fibs, I want to say only one thing. Please always have an alternate view. Okay, let me explain this concept with charts. See this one, this chart, see this is an older one, 2023 chart. On 4th August, what you are seeing here? A clean breakout, right? Here, forget this. A clean breakout with a good candle. Usually, a buy will happen here. So, your primary view is going long in this area. That's your primary view. But after a couple of hours, the price started to come lower below this breakout point. What you will think now? Even the price comes below the low of this candle also. So what your opinion now about this chart? You still hold the primary view or have a stop loss? This is not wave theory because people will talk about wave theory only. It's just a rounding bottom. Classical analysis. Take it as a head and shoulders, whatever pattern you trade. The price gives a breakout, you are buying, and the price started to decline and comes below the breakout point or even below the candle of that breakout. What you will do? You will take a stop loss, right? What is that stop loss? That's the alternate view, right? I don't understand these people's opinion. See, if you have only one view and trade, and even though the price moves opposite to your view and still hold your view, then I don't have nothing to say to you. In wave theory, I am saying it as alternate view. In any other technique, we will say it as a stop loss. That's all. But the concept is same. I want to say only one thing to my learners and listeners of Magic Fibs. Always have a stop loss or an alternate view. That's the only way to survive and be in the market for longer time, right? So this is one such example. And again, one question. With the help of wave theory, can we predict this breakdown? Yes, of course. This is the normal chart with no wave theory, just a trend line of breakout. This is the chart of wave theory. The same chart, right? Same chart. You can see the date also, 4th August 4th August. What you are seeing here, an end of wave 5. Even though the price gives a breakout, after a wave 5 completion, the price eventually come lower. So what happened next? The price even started to come lower. Okay. Do you still hold the same position here of going long? The price still not crossed 1200 even now. You can check the stock. I will always approach the market with the alternate view. Not only me, everyone should have the alternate view. You trade the primary view, but if the price not moves as per our expectation, you should have a stop loss or an alternate view. Whatever analysis method you can have it. Even now, few may think that after the price rejection, I have marked the 1, 2, 3, 4, 5. I'm sorry. I will share the chart right from this moment. Okay. See, this is on 6th July, expecting a wave 5. 18th July, internal subways. Still the subwave 5 of 5 is pending. Right? This is on 18th July. This is on 28th July. Still the wave 4 in complex pattern. Still expecting the one more high. This is 31st July. The price touches the channel top and gives a clean breakout. This is the breakout line and you can see the volume. Right? Eventually, most of the people buy here. But wave theory saying a different story here. So what happened next? Decline. The most important thing you need to understand here is the stop loss or an alternate view. Both are same and use it wisely. If your primary view not worked well, you need to take the stop loss or you need to think in an alternate way. See, even if you are trading in the cash, you are not taking the stop loss. Yes, I want to address this point. Many people are trading in cash only. Yes, I appreciate that. But in cash trading, they are not using the stop loss. I'm not talking about the investment. I'm talking about the cash trading. Even cash trading, you need to take the stop loss because mostly people see only the monetary profit or loss. But most people not seeing the time-wise correction. This stock still not crosses 1200. The entire price action is still in sideways, and I think even now the price is trading around 1000. Even if you come out a stop loss point here, even if you follow some in normal technical analysis like this, you can come out like here and you would have taken the next best trading available. You miss the opportunity also, right? So stop loss or alternate view, both are same. And I will always analyze a chart with alternate view and my analysis will always be available with the alternate view, right? This is my stand and I will approach the market like this only. I'm sharing all this analysis only to understand the wave theory and don't take it as any sort of trading recommendations. So with this note, we will move to the this week market analysis. I'm still having the same view because market is moving as per the expectation only. Nothing deviation happened as of now. I'm having the primary view of the price to reach 24,530 as per our midweek market update. And even I shared the same thing on Thursday, right? When the price reaches 23,900, we expected the price to reach 23,950 from 24,300 as per our midweek market update, and it has been done. So the decline is about 350 plus points. Though the price reacted fast around 23,950 because that is what the level we discussed, but it still holds the important level of 23,900. The 23,900 is important support, but if declines further, need to check the 23,830, 23,860. See, in Thursday I said 23,900 itself an important support. On Friday opening, the price not went below, even opened below 23,900, right? I think it opened around 23,920 or 917 and started to move higher. So this 23,900 acted as good support and the price reached 24,150 plus, right? So still the price is moving as per the expectation only. And see, this view is invalid below. 23,750. The same will apply now also, but with slight modification. I will say the other levels also now. So the primary expectation is the price may gap up and start moving higher. That's the one probability now. A gap up and continuation in trend so that the price may reach 24,530. And this level should be also crossed, the previous high. Suppose if the price comes lower because the current price action is slightly declining, some sort of correction may possible. If the price does not open gap up, the price may give a pullback and start moving higher like this. So my primary expectation is a gap up and continuation in the trend, or a slight pullback and start moving higher. So this is the approach I'm having right now. And as I said in this note, below 23,750, this view is invalid. And the 23,750 comes here approximately. And even you can take 23,650. So 23,650 to 750 is important if the price comes lower. This view of price reaching 24,530 will be negated if the price comes below this two zone of 23,750 to 23,650 with the fast price action. Right? This is an alternate view. Primary view, gap up, moves up, or a slight pullback and moves higher. So this is the view on Nifty. Again, this is not any recommendation. I'm just sharing my analysis. And Banknifty, yes, as I said, the Banknifty is not yet clear, so we need to follow the Nifty. And even if you remember, in our midweek market update on same 27th November, I said that the price crosses this previous high, the price may touch this gap zone, right? Banknifty crosses the previous high and the price attempt to touch the gap filling zone, slightly missed. This is what happened. But Nifty not moved above this point, so came lower. I don't know what fault they find, but the price moved as per expectation only. Fine. So now, what is the probability in Banknifty? As I said, we need to follow Nifty because Banknifty is not yet gave a clear view. My expectation is the price may take support. Even if you see, I said these two lines, right? The immediate support is this point. I not change any single line. The price is taking support here itself. So I remove this line. So my initial idea is, yes, the price at important support, the price may start moving higher. Okay. Since the price already reaches very close to the gap filling zone, there is a probability that the price may stop in midway and start coming lower here. Okay. How to align with the Nifty? See, the expectation is a small dip and price reaching 25,530, and this 25,530 may have some rejection. If it rejected, one more pullback and the price may start moving higher. So this is the expectation I'm having in a little medium term. So during this time, the Banknifty may give an intermarket divergence like this. I mean, Banknifty not making a high, but Nifty making high because of any gap up, right? Let me see. And this pullback can be this pullback and the price may start moving higher. Here or here. Then we need to see. Okay, these are some assumptions. Anyway, we need to see how the price reacts in the first half of this next week, maybe Monday, Tuesday, Wednesday. Then we can have a next view. Okay, this is the broader view I'm having now in Nifty and Banknifty. As I said, if the price crosses this point, this zone, 53,650 to 53,550, then there is a higher chance of correction, entire correction itself over here. The price rejects, one more low is also possible. We need to see how the price reacting here. That will give the further clues for longer term. I hope you are clear in my viewpoint, right? Okay. So this is the approach on Nifty and Banknifty. So the immediate expectation is a pullback or gap up and start moving higher to 24,530, and the invalid level is below 23,750 to 23,650 based on how the price reaches here. Even if it comes slower, this can become a support and start to move higher. So let's see how the price opens and continuing. So Banknifty also some expectation like this. Let's see how the price moves from here. Okay, this is the approach on Nifty and Banknifty. And small cap, see the price is currently at resistance. If you draw a channel, the price exactly moving within a channel, and as a wave pattern, I can say a W, X, ABC, right? ABC, Y. So whether the W completes its a correction, yes, possible, because we have a view of entire correction itself over. So in this approach, we can see some pullback, maybe a gap up or a pullback and start moving higher. So as of now, this look like a completion of correction only. Let us see how the price reacts here, and then we may decide is that wave is we can expect or not, because we already have a support point 17,100 to 16,700 also in small cap. So the price at important zone, let's see how the price reacts in coming days, and let us decide whether that is due or the correction itself over or not. So this is the view on small cap. Now let's move on to the commodity section. See, silver, I believe some sort of pullback may come in silver. This is daily chart. So for that, the price needs to minimum cross $32, 32.03, or else the price may still may come one more low to the 29.5. This is the approximate level we need to see. So possibly, because this is a minimum expectation, the price taking support at the minimum expectation, and yes, there's a higher chance of completing the most probably a wave A. So if the price starts to give a pullback, we may expect 32.6 to 33.19 or 2. Okay, this is the expectation. 32.6 to $33.2. For that, the minimum the price needs to cross above this high. But if the price comes lower, 29.47 around this level can be the important support. We need to see what pattern it takes. But when the price trading here, in the first week of November, I said that some sort of correction or sideways may develop in the silver. As of now, the price taking the corrective structure only. So this is the broader view structure also. It can still move like this, or total sideways may happen here. Okay, this is the approach on silver. And crude oil, see the price still not come lower below this point. If the price comes below this, we can expect low to this point, but still the price is moving sideways because all are three ways. You can still draw a triangle here. Okay, and if the price gives a breakout, we may see the price may try to reach the trend line. Only below this point we may expect a decline, right? So this is the approach on crude oil. And natural gas, I hope you remember that while seeing this decline in the last week market update, during this decline I said that most probably the price will not stop the correction here. It may move sideways, and you can see a low, a high, and the price again came lower. So this is the understanding you can get if you understand the wave theory. By seeing the chart itself, we can get the 50 to 60% of market direction. So that's the minimum expectation. But once you get experience, you can, by seeing the chart itself, because while seeing itself, you can see the nature, the pattern, you will recognize those patterns and nature. So just by seeing the chart itself, we can understand what the price is doing now and what it may do in the coming days. That's the level of understanding we can get from the Elliott waves if you understand it in proper way. So now, yes, the view not yet changed. As I said, the price still moving in sideways. It can even come below to this point one more time. So the price needs to take out this pattern for one more upside. Okay, I believe one more leg upside is pending. So for that, the price needs to take out this range. And if the price comes slowly to this point, this can be the good support, right? So this is the view on natural gas now. Let us see how the price reacts here. As I said just before, if you learn the Elliott waves in a proper way and in practical way, believe me, if you open the chart, just seeing the chart itself, you can understand what the price is doing. Yes, of course, it needs practice, but initial times after learning the material, you can understand minimum 50 to 60%. So what we may expect next. So that's the level of understanding we can get it from Elliottwave. And as you see in the example, see the step by step. Usually people buy here, but we know that this is an end of wave 5. So end of wave 5, the price will decline. And even I showed the step by step approach. See, you can see the price how moves as per the wave counts marked prior, okay, prior to the price action itself. That's why I'm calling my course as waves leads the price. See how beautifully the wave leading the price and coming lower. You can also do the same if you understand the wave in a proper way. You can register my course and you can learn this wave theory in the most practical way. I give all the details in the description. And one more thing, you know very well about the well-known website called StockEdge, and this is very good website for reading the lot of data about the stock market. StockEdge has been provided an offer for our Magic Fib viewers, and I am transferring the information to you. So if you wish to subscribe for premium plan, that is $3.99 per month, and if you register with our referral code of Magic 100, you will get 1 month free for this plan, right? So in this plan, $3.99 per month, you will get all this data, okay, 400 plus advanced scans and combination scans, right? F1 zone market breadth. So you can check in the website, and I will share that referral link in the description. Thank you. I hope you like this video. If you wish to get the market updates twice a week, you can subscribe my channel, share it with your friends, traders, and families. So thank you. Capital protection is the most important thing in trading. Trade safe. We'll meet you in the midweek market update. Take care.